All right, I'm just going to start with a quick introduction. Thank you for joining us today. My name is Claire Ladd, and I am the Programs and Services Manager at the Massachusetts Nonprofit Network, or MNN. Just a few quick housekeeping items. The recording and slides from today's program will be emailed to you following the webinar, so please keep an eye on your email for that. Additionally, if you have technical difficulties during today's workshop, please submit them to us via the chat at any time. Please submit any questions via the chat or the Q&A function. I also want to give a little background about us here at MNN. Our three goals at MNN are to strengthen the nonprofit sector through advocacy, public awareness of our sector, and capacity building services. And this webinar is part of our capacity building offerings as just our general webinar series. So please stay tuned for future topics in the coming weeks, as we're always offering more webinars with our affiliate members, and reach out to us if you have any topics you'd like to see. Our efforts are made possible by our more than 600 member organizations. To those of you who are members, thank you for your partnership. And if you have not yet joined the network, but would like to take advantage of all the networking opportunities, trainings, and cost savings on various services, please visit massnonprofitnet.org/join to find out more, and you can reach out to me at any time as well. With that, I'll turn it over to today's presenters, Jen and Melissa from CliftonLarsonAllen LLP.
Hi, everyone. Thank you, Claire, for the introduction. Thank you for joining us today for this presentation on developing risk-based reserves for nonprofit organizations. My name is Jennifer Olivier. I'm a signing director with CLA in our nonprofit practice here in Massachusetts. I'm very passionate about the nonprofit industry, and my role at CLA is to help nonprofits of various sizes with their accounting needs. Melissa, do you want to do an introduction?
Sure. Thanks, Jen. I'm Melissa Murphy. I'm a manager in our nonprofit practice. I've been with CLA almost 8 years and work exclusively with nonprofits.
Great. Before we get into the materials, I just want to call your attention to this disclaimer here. Just a reminder that this presentation and the information contained within it are intended for general informational purposes only. Every situation and every organization is unique and different. Therefore, it's always important to make sure you consult with your advisors for your organization's unique needs. Over the next hour, we're going to go over a few things. We'll first review the learning objectives. Then we will go through and define reserves. We'll discuss the current environment and reserves, discuss communicating the need for reserves, and then we'll move into segments on developing risk-based reserves and developing a reserve policy. The learning objectives for this slide are to, after the session, you should be able to define reserves, identify common misconceptions about reserves, recognize the importance of them in your organization, identify how to develop a reserve policy, and be able to articulate the importance of reserves to your stakeholders. Melissa is going to take us through the first section of the presentation.
Thanks, Jen. So here we'll go over defining reserves. We move to the next slide. Awesome. So why does an organization need reserves? Here on this slide, we've put a couple of examples as to why an organization might need a reserve, like bridging cash flows, weathering economic cycles. Reserves has become quite a big topic in the nonprofit industry over the last couple of years. So definitely an important conversation that should be had within management and stakeholders in the organization. Reserves can help protect against unpredictable political behavior and maintain and purchase productive assets. Move on to the next slide. So here we'll just talk through some misconceptions as to what is a reserve. So many may think it could be excess cash or restricted cash. And while reserves are typically or need to be liquid, it may not necessarily mean that it's restricted or excess cash, as cash can generally is already reserved for some other purpose. We get this question a lot. Jen and I have done this presentation a couple times, but often people are asking, well, what's the difference, or why would we need a reserve over an endowment fund? Endowment funds are generally donor restricted, and you can only use the earnings for operating funds. So with a reserve, there's much more flexibility within management as to what those funds are for. And then we come to unrestricted or net assets without donor restrictions. And this can include assets that are not liquid. So it might not necessarily mean that reserves equal unrestricted net assets. And we'll kind of go through on the next slide, breaking down what this looks like. So here we'll start with net assets without donor restrictions and basically break it into two categories. Those that are available for designation by the board and not available, which is often things like property and equipment, fixed assets. So from there, under the available bucketed category, we further break it out by board designated operating reserves. So we'll obviously talk in more detail what this looks like. Then there are the undesignated operating funds within net assets without donor restrictions. So this can include non-current or non-liquid net assets that are excluded from that funded reserve. And then lastly, your organization may have other board designated funds that might be for a special purpose or something like a quasi endowment. So this kind of helps break out kind of where we're going in this reserves conversation. So we talked a lot about what reserves aren't. So basically, where does that leave us? So reserves are liquid and available, meaning that they can be converted into cash quickly with minimal impact to the price received. And then the other important factor would be reserves are not donor restriction or restricted. So it can be used by the organization for anything. So here on this slide, we just do kind of a quick, easy calculation on how to back into what is available for a reserve. So you start with your total net assets without donor restrictions. So here we've just used the number 2.5 million. We back out that fixed assets or those non-liquid assets to arrive at the available net assets without donor restrictions at 1.25 million. And then from there, we would further break out any board designated funds. So quasi endowment, any special purpose funds. Here we've identified a capital project fund for 750,000. So that leads this organization with 500,000 available for undesignated operating reserves. All right, Jen's going to take it from here.
Awesome. Thank you, Melissa. So next, we're just going to walk through some considerations to keep in mind as you think about the environment and reserves, and really kind of, as you step back and think about where you are and where you're hoping to get with the reserves at your organization. And there is a large variety of, kind of financial positions out there of different nonprofit organizations. You might be an organization that each year, you end the year at a break-even point. You don't really have significant surpluses or deficits, and just kind of stable in the budgets each year. Other organizations may operate with a deficit, or they may operate as such that they're not prepared to know how the year will end until they get there. I think the trend we've noted with organizations over the past couple of years, there's been a lot of uncertainty and maybe some swings in donations and contributions and grants. The organization may have received more than expected or more than typical, maybe less. So it's a little bit difficult to think about the past couple of years as you're stepping back and looking at benchmarks. For some organizations going through the reserve process for the first time, it may be helpful to look even farther back, look at, what was the norm for the organization 3, 4, 5 years ago, and use that really as, what you expect going forward for the organization. The past couple of years as well, is a good place to reflect and see, were the reserves there when you needed them, if you needed them. If there was a policy in place, it's a good time really to step back and see what the reserves were. Were they sufficient to get you through if needed over the past couple of years? And so really, best practice would be for all organizations, part of your policies or part of your governance would be looking at those policies, how are they working? Do they need to be tweaked? And making this really a process going forward as taking the step back and evaluating. And, really just a reminder, for all organizations, I mean, really the point of a nonprofit is sustainability, being able to carry out the activities, achieve the organization's mission, and also planning for, future capacity, future growth, and really designing the organization's reserves to make sure that the organization can continue to withstand, uncertainties in the economy, uncertainties in the market, and be able to continue their mission into the future. We do have we've got a couple of polling questions that we were hoping to try with the participants here. So, if you can participate, that would be great, but we're just trying to get a sense of the audience here with this question. And so we've got really 3 parts here that you could choose for an answer. The first being, yes, the organization has a formal policy. The second is no, but we're working on it. And 3 is, maybe you're just at the starting point of the discussions, haven't started yet, thinking about it and want to learn more. So curious for feedback here on this polling question. And we'll give it just a moment to see.
Sorry, 1 second. I'm having trouble getting the poll up in 1 second.
Okay, thank you, Claire.
So you see that?
Yes, we can see the launch of the
great.
question. We'll just give it another few seconds for responses. And Claire, I don't know from our visibility, I'm not sure if we can see how many have answered or not, if it's my screen, but I guess if we have, a number of responses, maybe we could just close the poll and share the results when you have them.
Yeah, it looks like responses have stopped coming in, so I can end it and share the results so everyone can see them.
Great. Awesome. So we do have a mix here of working on a policy or haven't started the discussion yet. So, that's super helpful because as we go through this presentation, we do like to make sure we're keeping the audience and your needs and, where you are with the process at hand. So thank you for your responses to that question. As we go through this section here, just on the environment and, we do like to share kind of sometimes the concerns that we hear from nonprofits on this topic. One of them being that, we're a nonprofit, the IRS says we can't have a surplus, we can't have a profit. And, that really is a misconception because, it may not be a profit, but, the surplus is something that can be utilized in forming these reserves and really building the strategy around supporting the organization in the future. Another misconception that we hear out there from some people is that, organizations that have these large reserves, are they hoarding the funds? Are they not spending it to meet their program needs? And again, the larger an organization gets, the larger they need on hand as a reserve. We'll walk through some of the calculations, but you'll see how the size of the organization, there is often a significant reserve needed if you're looking into adopting these policies. The third one being the misconception would be, a nonprofit has a large reserve, so we're not going to, give them more money. They don't need our money. Again, that's a misconception as well because, we'll walk through the considerations in forming these, but, really reserves are intended for other purposes. They're intended for growth, capacity. They're intended for, an emergency need or access to funds when needed by the organization. So we'll walk through all of this, but just wanted to throw those out there. If you've heard those or you're thinking of those in your mind, is definitely something that is not completely accurate, and by proper policies and procedures and thinking about this is a good way to start developing your reserves. Continuing on here, sometimes for nonprofits, they often feel like they're caught in the middle. They may be discouraged from keeping those large reserves on the books, but at the same time, when you're going to grantors and funders, or maybe there's, some institutional funding received, there's the other side where those entities may be looking for someone that has a reserve and has that stable financial position to be able to, take that money and do something with it and that they really can kind of manage that funding. So it's kind of a delicate balance there, being caught in the middle. But hopefully by the end of this hour here, you'll feel a little bit differently about that as well. Melissa, I think you have the next section here on communicating the need.
Yes, thank you. I also wanted to quickly note that if there are any questions, feel free to put it in the Q&A, and Jen and I will continue to monitor that throughout the presentation and answer any questions either as they come through or towards the end of the presentation. So the next couple of slides we'll be talking about communicating the need for reserves, which is probably based on the poll results, a pretty important section of this presentation. So if we move to the next slide. So the first step in the conversation is determining why your organization needs reserves. And we talked about that a little bit earlier on in the presentation. But in order to start the conversation, stakeholders, management needs to know the why. And reserves are needed for all nonprofits. Reserves directly relate to carrying out the mission of the organization in near term and long term. So how do we communicate that need? And it's telling the story, looking at where your organization is going, historical trends on where you've been, and what you need to prepare for in the future. Slide 19, thank you. So the first piece would be communicating the need to the board. And here it's really important to be transparent about how reserves are calculated and their future use. Clearly delineate between uses for reserves and make the link between strategic planning and reserves very evident. So I think it's a conversation that should be had with your board pretty frequently. Looking at some nonprofits that I've worked with over the years, I mean, it could be a number of different reasons why having a reserve fund is important. Sometimes an organization might grow faster than they expected to and will outgrow their accounting software, and having a reserve in place for something that might not necessarily be in next year's budget, you have that kind of nest egg to fall back on. Or if you're growing and you realize that there's a new position need out there that might not necessarily be budgeted for. Those are all things that could be solved with having a reserve fund. And really talking about this with the board and the need throughout the year and where you're going is so critical and really helps facilitate the conversation. So the next step would then be communicating the need to external stakeholders. We'll talk about a little further in the presentation how to fund a reserves and use it and looking at the calculation. But it's important to not only have these discussions with your board, but also external stakeholders. And again, just being transparent about how the reserves are being calculated and their future use. And advertise the need and purpose of reserves through discussions, website, financial documents like your financial statements or even your tax return. I mean, really paying attention to that part in the 990 where you talk about your major programs and where things are going and what the goals of the strategic goal of the organization is. These are all ways to help facilitate the conversation and really should be considered when planning for reserves. And looking at benchmarking yourself against peers to see what they're doing across the industry is also extremely helpful. So here we've just listed out a common challenges that we're seeing across the industry. I think Jen's already alluded to some of these and kind of the misconceptions that nonprofits face with producing a surplus and that sort of thing. But some common challenges that we've noted here is meeting the demands of the community for program activities. Oftentimes, I mean, there's so much focus on looking at the statement of functional expenses and how much you're spending on programs. But in order to operate as a nonprofit, you have to invest in people, you have to invest in technology, and that kind of overhead is just as critical to the organization and the growth of the organization. Depending on the different revenue streams you might have in your organizations, there could be cuts and delays in funding. So having that reserve is critical to meet the short-term needs of the organization if certain funding doesn't come in from a cash flow perspective. Achieving long-term financial stability, raising funds to cover all costs, including administrative and fundraising. I already alluded to that. And challenges raising revenue without donor restrictions. Some organizations rely heavily as a fundraising strategy on soliciting restricted grants because that's how they get the majority of their funding. So again, having that reserve to fall back on if certain things don't come in is extremely helpful for the organization. The next slide. So continuing on the common challenges, I mean, I think one of the most difficult conversations is difficult aspects of developing a reserve is having this conversation with funders and external stakeholders. I mean, easier conversations is always about program expansion or operating support. Oftentimes when you're applying for a grant, I mean, it's for a specific program or something like that. So it can be difficult to kind of communicate how critical the need for developing this reserve fund is for your organization. I think we have another polling question, the last polling question here. How often do you speak with your board, funders, and other stakeholders about the need for reserve funds?
I'm going to launch that.
Awesome. Thank you. Are we still getting questions in or answers?
It's slowed down, so I think I will end the poll now and share the results. There we go.
Okay, pretty good mix here. We have 33% frequently, 44% rarely, and 22% never. Awesome. Okay. All right, turn it back over to Jen.
Awesome, great, thank you, Melissa. Sorry. So next we're just going to walk through developing the risk-based reserve approach. And in doing this, sorry, getting my screen situated here. So, first, before you go through and develop your reserve, you really want to take a step back and look at a few different things related to the organization. The first one is taking a look through your historical expenditures, your cash flows, and your revenue, and really looking at that not just on an annual basis, but breaking it down further to a monthly basis. For a lot of organizations, there may be some cyclical or seasonal trends, and just trying to get an understanding of, how cash is coming to the organization, spending, is it consistent during the year? Are there peaks and valleys in there? In addition to looking at those, the cash in and out is really looking at your budgeted expenditures, your cash flow, and your revenue. And, comparing what was budgeted might not have been actual, but, was it something that you had budgeted to spend, maybe didn't quite have the cash for it, and really looking at that and see how you're budgeting throughout the year and how your actual cash matches up against that. You also want to think about your risk tolerance, and this varies from organization to organization. And really, once we get into developing the policy, this will be an important component of it, because you want to assess, what is the tolerance of the organization, of management, of the board or the committee, and what, kind of risk is out there as you develop the reserves. How much do they want to have on hand for that reserve? How much, as you look at what to do with the reserves as you build them, whether it's some type of investment portfolio or cash, and really kind of assessing what is out there for tolerance for that. as Melissa had alluded to as well, you want to take a step back and really think about, maybe you have a strategic plan where you're projecting significant growth of the organization, or maybe you're looking at buying a facility or a property or expanding, and really thinking about that and how that impacts the need for these reserves or funds or cash on hand in the future. And so going through the reserve development process, there's really two phases that we want to walk through here today. The first phase is identifying the risks to major divisions and departments of the organization. And what you'll do is start by going through and looking at your current policy and your current practices. Based on the poll results, it looks like a lot are maybe just in the planning stages of this, and maybe you don't have a current policy, which is completely fine. So, if you did have that, you would review that policy. What you would do next, though, is if you don't have that policy, is still you want to kind of move into a data collection phase. Larger organizations may do this through some type of surveys or interviews, but really this is the discussion that's having with the organization, and making sure as you collect that data that you're getting the opinions of all departments in the organization. So a lot of times, it might be thought this is a conversation that stays with the finance department or the finance committee, but really to identify the risks out there for the organization, you want to talk to your facilities management, you want to talk to your program personnel, you want to talk to your development team. And all this information is really what you're going to kind of accumulate and consider as you go through phase one. As you move through this, and kind of before you move into phase two, you want to bring all this data back together and meet with those stakeholders in a session and talk through them. In this phase, you're going to weight those risks. Obviously there's a lot of risks out there people will come up with and different things, but really having a conversation with everyone there to see what is the most relevant, what poses the biggest exposure for the organization, and really trying to see what risks identified are most relevant. So after phase one, moving into phase two. In this phase, you're going to go through and do more of a modeling, go through a draft policy, and work through the governance approvals. So again, just walking back through phase one in more detail here, going through that current policy, getting some historical context. If maybe you've worked with other organizations in the past, is really trying to see, what examples do you have, or a lot of times this may be reaching out to your colleagues in the industry, getting examples or samples from them. We often, in our role here at CLA, we often have requests for this. People want to know what others are doing, and we may have, different examples we can share as well. You also want to make sure that you're going through and looking at those risks that were accumulated, looking at, make sure it captured any capital improvement plans, and then making sure that you're also considering if you have an investment policy, how does that correlate with reserves as you go through and develop as well. So just a reminder here again on phase one, make sure you're including all the internal directors. I think one important one here to note, and Melissa brought this up earlier, is technology is changing a lot, and so we see a lot of organizations right now is looking for ways to get into more of efficiencies through new technology. And so oftentimes in these interviews, if you're asking around, your finance personnel may note this, but the IT people, what do they see on the radar as kind of a more significant expense or investment in this area, and bringing all those into the data that you're surveying. As you go through these risks, you do want to make sure you're noting what's the likelihood and the timing of these risks occurring. If it's a worst case situation, there's a 5% likelihood of it happening. Taking all this into consideration as you go through this process. You also want to make sure you're bucketing what the financial impact of each of these risks are. And at this point, just a reminder, we're just kind of going through the planning phase where we're taking notes. It's nothing that's formalized, but really taking a step back and asking the questions and figuring out, what is the situation? What are our responses now? And what would be, the ideal approach or the preferred approach. Just a reminder here on a sample survey. Again, the formality of a survey is probably more for larger organizations. This may just be a conversation you're having on the phone or in your monthly meeting or weekly meeting with others, but find out what others are interested in. Are they looking for a reserve to help in slower years? Are they hoping for them to support initiatives, develop new larger scale changes of the organization? And really, by going through this process, you're also helping to kind of get excitement or buy-in from others in this process over the reserve policies you identify. Again, this is oftentimes, more for larger organizations. It might be on a smaller organizations, might not be this formal, but just we wanted to share some samples here of what may be held in kind of a sit-down meeting with stakeholders. So looking through and seeing if there's any gaps in what you've collected for information, going through and it may have been a very high risk for one person you spoke with, but when the whole group steps back and takes a look at it, maybe it's not as significant. So really going through each of the risks identified is very important. Finding out what the timing of these are. As we walk through this model, we are going to look at how you weight these different risks and the responses and the reserve needed. So it really is important to see what the likelihood, the timing, and the impact of each of them is. Once you get to the end of identifying these risks, you'll want to highlight the ones that you want to include in developing your reserve calculation, and also make sure that there's nothing, big picture that's missing as well. So once we've gone through that, really the data collection phase, we're moving into phase 2. This is really where we're going to quantify the risks and build the policy. And so, the objective of developing a risk-based reserve is to take data, develop some models. We do this for other sessions that are longer, where we go into some of these modeling techniques. It's hard to do in an hour, so we kind of simplify the presentation here today. But really, what we're doing is trying to go through and compile the risks, assign the dollar amounts, weight them, and really have an understanding of what the financial risk of to the organization is. Through this process, as you went through that risk identification, we've included here some common reserve categories that you may be familiar with or maybe you've heard about, but these are really the most frequent ones that we do see developed. A lot of people, when they think about the reserve, they might just be thinking about the operating reserve, that it's there as kind of a backup for cash. But really, if you've gone through this risk identification process, it's a little bit more detailed. And so you might have identified the operating reserve that's there as your internal line of credit to help you with a one-time unbudgeted expense, to help you with maybe a decrease in funding or a loss that you weren't expecting. In addition, though, one very common item is the capital asset reserve. And so, when speaking with others identifying risks, if you've got an old building, that the roof, you've been informed the roof is only going to last another couple of years, this is something that you've identified here that now really belongs in a capital asset reserve. And next, we're moving through other categories. The next one would be a fundraising reserve. And so with this, if your typical fundraising activities maybe have been declining, or maybe you're in kind of a new development phase and you're looking to find new avenues, you're not quite there yet, we will see a fund developed as a reserve for kind of a backup for your reserve for fundraising. The second one listed on this slide here is the opportunity reserve, is what we like to call it. And so this would be capacity building. It could be investments in technology, infrastructure, maybe a research and development phase. It could be development of staff, expansion of program staff, investment into employees to attain and attract employees. Really anything that's an opportunity to further the organization can be bucketed into that opportunity reserve. And lastly, here we have major initiatives. This could be branching out into a whole new program, a new fund, a new grant, something that is kind of big picture plans for the organization, not yet there yet, but maybe it's part of a strategic plan. So that can become a separate component of your reserve that's developed. Now, once we've gone through, and again, we've kind of made this a complete situation. You may come to the end of this and only have the operating reserve or the capital reserve, but we're just trying to demonstrate here how you walk through this process in quantifying the reserve. And so here in this example, this organization has projected a maximum full risk valuation of $6.7 million to meet all these risks identified. This organization identified they need that operating reserve, they need a capital reserve, fundraising, opportunity, major initiative. And with that, you can see to the right there that they're weighted. This full reserve, this would be the ideal situation. Half of that is really just that operating reserve, but you can see those components are weighted. We can see which is kind of, higher dollar value here. And this is really getting you to understand the big picture needs of the organization if everything goes as planned for developing this reserve. Again, that was the perfect situation. If you have that $6.7 million ready to reserve, you're fine. But a lot of times, we're not there yet. We're starting at the basics. So going back through and not everything's going to happen at once. You're not going to be having all these investments at the same time. And really, we're going to kind of bring that reserve need down a bit. We're looking at assessing that time horizon and that likelihood that we walk through, and taking a step back. And in this example, we can see that by lowering the total need to 4.7 million, we're still capturing a need of the organization over the next 5 years. This 4.7 is going to cover us for 70% of our full needs. It's going to cover 47% of that operating reserve that we looked at for operating expenses. And in this example, this is the bottom range they're hoping to develop in their reserve. And so what this looks at here is we've kind of created a ceiling and a baseline in this example. And so the maximum ceiling, the goal of this reserve is getting to that 6.7 million. The baseline to cover us over the next few years is at 4.7 million. And this is done, I think through this process, a lot of times this is discussions you're having with committee and the finance personnel, and really, understanding it to this level and, what the coverage is and the implications. And this can always be adjusted as you're going through your policy, but really kind of helps. I think a lot of people that are more from that mathematical side or the quantified preferences, letting them understand, even starting at that baseline is a step in the right direction. You're getting some coverage over your expenses, and you're covering certain of those risks at that full valuation. Just some other reminders as we go through this. If you have an operating reserve, think of this as a line of credit. It's something that if it's paid out, it's repaid. It's not something that, treat it like as if you had a line of credit with the bank. With that, a lot of times we see a best practice is if it's drawn down on, that you're communicating that to the committee. But really, this should be the function of management. Management under a properly deserved reserve policy has the ability to use that operating reserve like a line of credit, let the committee know that it's being used, when it was used, when it was repaid. But this becomes part of operations. It becomes part of drawing down as needed for those identified situations. The second item here is that the risks that you identified in that phase one, they're going to constantly change, and making sure that you're assessing at least probably annually, maybe every couple of years, the risks identified. They will be changing. The dollar amount will change. If the construction costs go up, maybe what you had identified as that risk reserve isn't enough anymore. And just making sure that we're always continually reviewing this process. If the organization significantly grows or decreases in size, because the operating reserve is covering your expenses for a certain number of days, typically, that budget growth or reduction is going to impact that dollar value you calculated for the reserve. And also knowing as well that your risk profile is going to continually change. So go back and update that data model that you developed as well. Melissa, I'm going to move you over to the developing the reserve policy.
Thanks, Jen. So So we'll move on to the next slide. Thank you. So policy development, what to include. We've shared a lot of information here today. So let's take a step back and from the start, see what the next steps are. So the first step we have identified here is the purpose of building and maintaining a reserve. So when developing your policy, why do you need this policy is important to include. Or why do you need the reserves is important to include in your policy. Number two, it's also important to include the definitions of types of reserves. We've highlighted quite a few here today. So the more specific sometimes can be the better, but again, I mean, it's really based on your organization and the needs. Unfortunately, we'll give you tips and share some best practices here today, but it does and can look different from organization to organization. So defining the types of reserves your organization wants to implement, the intended use and calculation of those reserves is also important to include in a policy. And then also the timeline of targeted amounts, which Jen just highlighted on. So how often are you going to contribute to the reserve funds? How are you going to get those funds to contribute? And what your targeted amounts are. And that just helps the organization stay on track and monitor progress made. Number three, which I've already kind of highlighted on, the policy for contributing and building these reserves funds. So these are all important things to include within your policy. Next slide. Awesome. Number four, we have the authorization procedures for using funds from each type of reserve funds. So including within your policy how and how you're going to withdraw from the fund and what kind of authorization needs to be had. Is it the CFO, the CEO? Does it need to be approved by the board? Those are all things that should be discussed within management and the board when establishing this policy and fund, because it might look different depending on the type of reserve fund you had. Obviously, each fund has different needs, and so that authorization process for each fund could look different depending on your organization. Number five, we have the responsibilities for reporting reserve fund amounts and the use of reserve funds. So again, including this in your policy always helps set expectations for these reserve funds, how and why they should be used. And then policy, you might include policies about investment of reserve funds. So how are they going to be in certain types of investment accounts? Maybe only a portion is, but all things that should be considered when developing a policy. And sometimes maybe you won't hit on all of these in your initial policy. And as we talked about, I mean, it's something that should be revisited annually or every couple of years, because as your organization changes, this is going to potentially look different. So it's always good to revisit any policy, but especially these types of policies as your organization continues to grow, the environment changes, funding changes. Always good to look back and kind of reevaluate, does what we have in place still make sense given where we are today and where we plan to be in the future? I think that's all we had for, maybe there's one more slide. Yep, okay. So just going through the conclusion and what we've talked about here today. So basically, just to round it all out, consider which reserve methodology best fits your organization. I know there was a lot of information shared here today. Each organization has different circumstances, so something that might fit for one organization might not necessarily fit for another. So it's really, we hope that we provided enough information for you to at least start somewhere. A lot of you are already having the conversation, and maybe it's just a matter of taking it to the next step and developing that policy, and looking at the risks of your organization and what makes the most sense. Encourage discussions amongst decision makers and decision makers about developing risk-based reserves. So hopefully we provided you with enough information to start those discussions, and again, determine what funds makes the most sense. And then the last item here, implement or adjust your reserve policy to improve financial health of your organization and to adequately plan for the future. As you talk about the strategic plan of the organization, also revisiting this policy in place, again, to make sure that it aligns with the goals of the organization.
Yeah, and maybe we had one question come through. So if there's any other questions out there, feel free to send them through now and we'll try to go through them live here. But I think just also, to think about, like, if you're at the starting point, it's always helpful to look at other organizations' financials and see what they're doing. Best practice really would be, in your footnotes, in your accounting policies, where you talk about your without donor restricted net assets, is if you're developing these reserves, a lot of organizations will include right there a very thorough description of what those buckets are, what they're intended to be for, and really, looking around. I think the other thing to think about is, you're not starting, you might see organizations have a reserve of 6 months of cash on hand. That's not all that's realistic for a lot of organizations. And it's certainly not realistic for a lot of organizations as they're starting this process. So what we often see as well is kind of setting a target, like we're going to work towards having 2 months of cash on hand and budget it into your budget, and work through that for a year or two, see if you can meet that target, and then reassess and see, can we aim a little bit higher? Should we now start working on developing a technology reserve and kind of starting small and working from there. And I know we talk to a lot of our clients about this. So, having conversations and asking questions of whether it's your accountant, whether it's other nonprofits, whether you want to reach out to Melissa and myself about this topic. A lot of it is really the thinking stage and seeing where you want to go and where you hope to get with it. We did have one question come through about bond financing restrictions and how that plays into this. And I think the question, if I'm not answering it the way you're interpreting it, Melissa, but when you have those bond financing restrictions, you may have a pool that you have the bond, it's reserved and it's restricted for that purpose. So as you're going through that exercise of seeing what's available to use, you might have other things that aren't available for you to kind of assess in what's available for other reserve setups, is how I interpreted that question. Awesome, great. Melissa, do you have anything else for closing points?
I don't think so.
Yeah, and that was quick. This isn't a lot of time. So, if you think of other questions that you have, feel free to definitely send them along. We're happy to reply to those when we receive them. So. Great. Claire, so I think we're all set. I think we went through have a few minutes left, but.
Okay, great. If no one else has any questions, I mean, if you want, you can stay on the line for a few minutes in case someone does, but.
Yeah. I think we may have had another one come through, so we'll just, it was just a thank
Just
you.
a thank
You're
you.
welcome. Thank you. But yeah, we'll stay on here for a few minutes. So if you do have other questions, feel free to send them through. It is live, so we can see them as they pop through. So.
Oh, I see another question. Any advice for a brand new organization? It's a tough one. I guess it really depends kind of where the financial health of the organization and where to start. But I think, I mean, the earlier you start having the conversations and setting goals, the better. So acknowledging that there is a need and will be a need for a reserve policy, and also doing that kind of risk evaluation, especially for a brand new organization. Oftentimes, like I just always go back to technology because that's like such a hot topic right now. But a lot of brand new organizations will, maybe there's less complexity, so they go with an accounting software that meets their current needs. And as they continue to grow, they grow out of that software. So maybe a technology reserve is something that makes sense for a brand new organization. But I think the first step is kind of taking a look at where the risks lie within the organization, and then also kind of going through that process, having the conversations with stakeholders, maybe aligning it with the strategic plan of the organization.
And probably to add to that too is just thinking about your policies that you're developing. If you're a new organization, you kind of have a blank slate to work with, and the information that's out there, and kind of putting considerations related to this in your policies from the start. Another thing too to think about is you kind of have a fresh start to putting budgeting for these reserves in your grant request, and that's becoming more of a trend, is being upfront with grantors that X% or X dollar amount in this grant is going to help us build our reserves for capacity building. So many other questions? I think most everyone has logged off, but for anyone that's still listening, thank you for joining us today, and hope you found this helpful. And certainly reach out if there are other questions as well.